I'm very excited to talk about this. And I want to preface this by saying I've got a little bit of a personal interest in it. I know most of you probably think I'm in my mid 30s, but I'm not. I'm a little older than that. I'm one of those seniors. And I did have questions about it. And, I want to thank Art for helping me. So I've got a little bit of a vested interest here, but there's a lot of good things going on. But, one of the things I want to ask you about, Art, is, we talk about the baby boomers and that there's, at 65, which is your number, or 62, that there's like 10,000 people a day turning 62. That just blows me away. 10,000 people a day.
That's right. Yeah, the baby boomers are definitely on the horizon now, and it's a very big group in the population, and that is why actually reverse mortgages, I think, are even more important to talk about and understand. I actually think reverse mortgages are one of the greatest mortgage programs in this country, but at the same time, probably the most misunderstood.
Well, with that, I've got a few questions I want to ask you. I'm going to stop sharing this screen here for a second. And I just want to ask you a few questions about this. It's like, when we think about reverse mortgages, and people that are over 62, I want to talk about what are their primary goals? Like, what are their top goals when it comes to that age bracket? Can you help me out with that? I mean, I think I know you have a bit of a chart that you want to share. Can I bring that up?
That chart, but there's really there's many objectives, but there's three in particular. One is that people want to make sure they have enough money for the rest of their life. That's a big issue. That's probably, in fact, as you can see on the chart, that is the most important issue for senior homeowners, is making sure they have enough money to last their lifetime. And of course, you can see right below that, the second most important is to remain financially independent.
Mm-hmm.
They don't want to rely on, the government resources or family members and what have you. They want to remain financially independent. And then thirdly, they want to stay in their home. Those are the three top. We hear it every time we encounter a prospective reverse mortgage borrower. You can see many other goals there on the chart, but those are the top three by far. And that's really what drives most people in looking at a reverse mortgage.
When you talk about that, having enough money to, for the rest of their life, it's amazing how many people I know over the course of the last, say, 10 years, who all of a sudden I find out they're living in a foreign country. They're living in Costa Rica or whatever. And I ask them why. And it's to help solve that number one question. But there's a better answer, isn't there? I mean, it really is a reverse mortgage, isn't it?
Well, it is. And I that's why I say it's a very misunderstood product. So in a lot of cases, folks will end up resorting to something like, moving out of the country to find a cheaper place to live. Heck, I have a brother who lives in Mexico, and that was part of his focus, is that was a less expensive place for him to live. But in reality, in a lot of those cases, I think many of those folks really would not have to resort to that. If they were a homeowner before they moved, if they had equity, they likely had other choices that maybe they didn't fully investigate, and that might have kept them here. But not to say they're not happy where they ended up, but that does drive some people out of the country just because they're having trouble making sure that they can meet these goals.
Let's take a second, and if you will, I'll pull this one up as well. Is like, what exactly is a reverse mortgage?
Okay, very simple. The reverse mortgage, the core product, is a product that is does have some requirements. First of all, you have to be 62 years of age plus. But as I'm going to talk about in a minute, that's actually not entirely the case anymore. And primarily, it's used by homeowners that meet that age requirement and have a lot of equity. We typically recommend you should probably have at least 50% equity in your home or more for a reverse mortgage to work best. The first most important thing to understand is there's no monthly payments required, and I would underline required, because you can make payments if you want to. Interest is deferred. What that means is because if you choose not to make payments, there is interest on the loan, but that interest simply gets added back to the balance. In fact, reverse mortgages, frankly, are the country's original neg-am product, negative amortization product, which is it's become a scary term, kind of a negative term. And I think in part that's why some senior homeowners are afraid of the product, because they remember not too many years ago, early 2000s, the option arms with the negative amortization and belief that it created the real estate market. So that's a concern, but we can explain that why that shouldn't be as much of a concern. You do have to stay in your home. It is important. It's only for people who are going to live in their home as their primary residence. We can't do it on second homes. We can't do it on rental property. So you have to maintain occupancy in the home as your primary residence. In fact, if you move out for 12 months or more, let's say you go into assisted living, then that actually creates a default on the loan. So you have to maintain occupancy of the home, and you have to maintain the property, and you have to pay what we call property-related expenses, taxes, insurance, and HOA dues if applicable.
Well, as we get older, typically our income goes down. It's just natural. We're not working 40 hours a week. We may have sold our business, whatever it may be. What about those people who, and you've talked about this before, but I really want to dig into this a little bit of like, okay, you decide you're going to have a reverse mortgage, and maybe based on all the monies that we have coming in, we can't quite cover property taxes as an example. Is there something that's written into this that helps still say, hey, we can still do this and make sure that you have some money coming out and you can still access your equity?
Right. Yeah, that's a very good point. Sometimes, and we saw this a lot in the past, reverse mortgage, when made, we didn't have what they call a financial assessment review of the borrower. And in some cases, what would happen is they would apply for the loan, they would get the loan, and they would get all the money up front. And who knows what would happen to the money, but they ended up running into trouble maintaining what we call the property-related expenses, or even being able to do repairs and maintenance. So now, as part of that financial review, if it's determined that even if the borrower is eligible for the loan, if they're going to have some trouble maintaining these expenses on time and maintaining the property and repairs and so forth, there can be set up what's called a LISA, loan life expectancy set aside, where some of the proceeds are set aside so that some of these expenses can be maintained even as you enjoy the other benefits of the loan. So that's a key part of the process going forward.